Something historic just happened, and most people missed it. On June 30th, 2025, a Canadian tanker quietly departed the Pacific coast, carrying the country's first ever overseas shipment of liquefied natural gas. For the first time in history, Canadian energy wasn't headed south to the US. It was going west, across the ocean to Asia. What sounds like just another cargo shipment is, in fact, a major pivot in global energy. This single departure marked a turning point, not only for Canada's energy future, but also for US-Canada relations, global trade routes, and the geopolitics of power. If you've ever wondered how energy shapes the world and how a country like Canada could go from playing backup to becoming a central energy player, this story is your answer. And if you're finding this content insightful, hit that like button and share it with a friend who needs to understand the future of global energy. For over 30 years, Canadian gas followed one path, straight into the United States. Billions of cubic feet a day flowed south, generating decent profits but also deep dependency. In 2024 alone, $8 billion worth of Canadian natural gas headed across the border. But relying so heavily on one trading partner? That's always risky. In March 2025, Washington imposed a sweeping 25% tariff on Canadian imports, and energy wasn't spared. Suddenly, Canadian producers were at a major disadvantage, forced to compete at inflated prices. Long-term contracts were shaken. Trust in stable trade evaporated. That's when the tide began to turn. Enter LNG Canada, a $40 billion project based in Kitimat, British Columbia. This cutting-edge terminal chills natural gas to 165 degrees C, turning it into a liquid that takes up 600 times less space, ready for long-haul ocean shipping. No more pipelines to the US, just direct access to booming Asian markets. When the gas log Glasgow departed with 2.66 million tons of LNG, it wasn't just carrying fuel, it was carrying a message. Canada was ready to compete globally. Thanks to Kitimat's Pacific location, Canadian shipments reach Asia in just 10 days, compared to 20 if routed through the Panama Canal. That's faster, cheaper, and far more resilient. The timing couldn't be better. Japan, South Korea, and China are racing to boost their LNG imports, looking for cleaner, more secure alternatives to coal and oil. Japan alone plans to add 20 million tons of LNG capacity annually. South Korea is expanding storage. And China? It's locking in supply contracts with whoever can deliver consistently. And now, Canada is on their radar, not just as a seller, but as a trusted partner. No more price control from US benchmarks. No more vulnerability to tariffs. Canada is entering the global energy arena on its own terms. This shift isn't just about money, it's about power. By detaching from US pipelines and opening maritime routes to Asia, Canada has achieved something rare: market independence. It now holds pricing power and flexibility in a world where energy equals leverage. And this new freedom couldn't come at a more crucial time. As global tensions rise, from sanctions on Russia to instability in the Middle East, countries want partners they can trust. Canada, with its political stability and ESG credentials, fits the bill. Before we dive deeper, what do you think? Is Canada ready to play big in global energy markets? Or is this just a short-lived win? Leave your thoughts in the comments. We read everyone, and your insight fuels this conversation. This project isn't just a win for energy companies, it's a blueprint for inclusive growth. Over 50,000 jobs were created during LNG Canada's construction. More than $5.8 billion CAD and contracts were signed with local firms and the Haisla Nation, an indigenous community that now holds equity in the Coastal GasLink pipeline. That's not charity, that's partnership. The Haisla Nation isn't just benefiting, they're helping shape the industry. Even better, the Kitimat terminal runs largely on hydroelectric power, making it one of the cleanest LNG facilities in the world. In a market that's becoming more climate conscious, that's a major selling point. Of course, it hasn't all been smooth sailing. Canada's environmental standards are some of the toughest in the world. Harsh terrain, regulatory complexity, and high labor costs have driven up expenses. While U.S. Gulf Coast terminals enjoy lower construction costs and warmer climates, Canada must work harder to stay competitive. To help ease the burden, British Columbia introduced targeted tax incentives, carbon and sales tax cuts designed to attract investors. But this also sparked debate. Should taxpayers subsidize massive energy projects? And can Canada continue to expand without compromising its climate goals? LNG Canada plans to double its output by 2030, aiming to rank among the world's top 5 LNG exporters. That means building a second liquefaction train and expanding port infrastructure, all while meeting increasingly strict climate requirements. The competition will be fierce. Qatar is ramping up production. The US isn't slowing down. Australia is back in the game. But none of these players can match Canada's mix of clean energy, political neutrality, and Indigenous inclusion. That's not just a differentiator, it's a strategy. In today's world, companies and countries are judged not just on what they sell, but how they sell it. Canada's environmental leadership and transparent governance give it a serious edge. From low-emission production to equity sharing with First Nations, Canada is setting a global standard for responsible energy development. And buyers are paying attention. As net zero deadlines loom, countries and corporations are looking for LNG with the lowest possible carbon footprint. Canada's product fits the bill, and then some. Canada isn't stopping at clean LNG. The next phase includes major investments in carbon capture, leak detection systems, and partnerships with tech firms and universities to push emission reduction even further. This isn't about today's buyers. It's about staying relevant in 2035 and beyond. In an era of energy volatility, war in Eastern Europe, sanctions on Russia, trade uncertainty with the US, countries are desperate for stability. That makes Canada a valuable partner. But to stay on top, Canada must streamline permitting, speed up environmental assessments, and coordinate policy at the federal and provincial levels. The world doesn't wait, and neither will the competition. So, what did that first LNG shipment from Canada really mean? It meant freedom. It meant leadership. And it meant that the days of Canada being a junior partner in North American energy are over. Canada has staked a claim, not just in natural gas, but in how energy should be developed, exported, and shared in a 21st century world that values responsibility as much as reliability. The next few years will be critical, but if early signs are any indication, Canada is more than ready to lead. Not by shouting, but by showing. And if that's a future you want to follow, be sure to like this video, subscribe to the channel, and ring the notification bell so you don't miss what's coming next. Thanks for watching, and we'll see you in the next one.